You're watching Newsmakers, where we speak with executives from publicly traded companies that are making the news today. And right now with me is Ralph Shearing, the president, CEO, and founder of Soho Resources. And Soho has just put out its preliminary economic assessment on the Tahuehueto project in Durango, Mexico. Thanks for being here today, Ralph.
I really appreciate the opportunity, Doug. It's great to be here and tell the story of our company. It's quite exciting from my point of view.
Well, the preliminary economic assessment you've just put out is quite remarkable for the first time out of the gate here. Let's talk a bit about the numbers for the project. The PEA obviously changed some of the tonnages and looked at new information for recovery rates and so on, but what did they come out with?
Well, it's a milestone for the company to get this out, and it's a great document. What it has outlined for our project is originally we had thought this would be an underground mine due to the steep nature of the topography. The economic assessment has clearly shown that it can be open pit on portions of the deposit. So
give me an example. The open pit aspect, for example, roughly what are the numbers on the operating cost for that as opposed to the underground?
Well, the open pit, if we add them all together, the average cost of underground mining and surface mining on this project will be about $35 per ton. So obviously the open pit mining costs are lower, the underground are higher. Traditionally underground is probably in the neighborhood of $50 per ton for mined and milled. So with the open pit, reduces that down on an average case of $30 to $35 per ton. Okay. So it's quite good.
Right. And being an open pit deposit, that changes a lot to do with the economics, which the report told you.
Of course. For the economic numbers, so the net present value is about $113 million. Internal rate of return is about 34%, which is a good rate of return. The payback period is 2.2 years, so we will pay back all the cost of building the mine in that amount of time based on the current plan. The capital costs are about $85 million, and that is for building the mill, the infrastructure, bringing in the power, the tailings ponds. It does not include buying mining equipment because the plan is to hire contractors to supply all of the mining equipment. So that's a capital we won't need to put into the cost at this point in time.
Okay.
That gets into the operating costs.
Okay. And actually all those numbers are available to investors if they go and look at your profile at our RIQ calculators, resourceintelligence.net. You can see not only all your resource data, but also your operating and capital costs included in there. So you get a very good idea of what that's worth at today's metal prices as well. Ralph, you mentioned the $113 million net present value discounted, and that was calculated not at today's metal prices, but at something else. Can you explain that?
It's a 3-year rolling average price, so it takes into account the price of the metals over the past 3 years, and that's the figure we use.
Right, and we've seen some huge changes. What are the prices they used?
I think it's around $900 and some odd dollars. I can quote them if you give me a sec here. $965 per ounce of gold, $15.38 for silver, 2.92 for copper, 95 cents for lead, and 88 cents for zinc.
Wow. And we'll put the new numbers, at least that we're seeing today, for example, up on the screen so people can compare. Yeah, and investors can always go to your profile at Resource Intelligence, RIQ, resourceintelligence.net. Check out your profile and look at how your value changes with changing prices.
At current prices, I mean, it becomes so much better. I mean, the difference between current and the rolling average is great. So if the prices remain good, but for the time it takes us to build the mill, then we'll be paying this thing back a lot faster, and the economics will be a lot better.
Good. Let's talk about that valuation then that Snowden's given you. That was for not your whole project and not all of the occurrences that you found on the project, but for a small area.
Correct. It's just for the resource that we have outlined to date, and the upside potential on the project is huge. There's, in my opinion, maybe we found 1/5 and maybe even less of the resource that will ultimately be discovered and mined on this project.
Right. You've got some optics that we can have a look at to better demonstrate how the resource works. Can we pull that in?
Sure. I love speaking to pictures. It helps me out. So here is our pictures of the project. We're looking from the southern boundaries of the project up to the north. Right away you can see that it's very rugged topography. There the ruggedness is both a hindrance to exploration, but it is a definite help to underground mining. The hindrance to exploration, it's a little more difficult to build your access roads. However, you can see that all along this structure are our access roads, drill sites, so we have been successful and are able to build roads throughout the project. Even though it's very steep, there's enough material there to build your roads to get to the access you need. Of course, you have to blast in a few areas, but generally speaking, it's doable and not too difficult.
And also the PEA that just came out changed radically the structure of the mine, which is that instead of just being an underground, this could also be...
That's correct. It could be an open pit mine, particularly up in this El Creston zone. This area is designed in the current preliminary economic assessment to be open pit mine for probably 80% of it, and underground the parts that are a little bit too deep for open pit. So if we get back to the structures, our red structures here are the resource structures, the only area where we've included or we've drilled in order to put the drilling results into the resource. So there is this Cinco de Mayo, we call this the 14 zone up into Perdido. This El Creston is a structure extension fracture between two structures. That is one of our most well mineralized zones. That's the area of the open pit. We've done a small amount of drilling here. We've also done drilling over here in the Santiago zone, and this structure goes right over to the other side. So from here to here is about 2.4 kilometers, and again we haven't found the downward extension or the limits of the ore bodies so far, and they're open along strike as well. More importantly, this is only, you can see, one and a bit of structures. We have many more structures throughout the area that are mineralized. We've looked at them. We've sampled some of them. We know they're mineralized. The exploration side, upside potential of the project is enormous. We have drilled 6 holes in this Texcalama. 2 of these holes have hit good mineralization to the north. So the point really is that this resource we have is the tip of the iceberg of the project.
Right. And let's talk about that then, what the tip of the iceberg looks like so far. And we can put this aside for now. When you add up the gold ounces, since this is 40% gold, and add on to that the rest of the metals, you're looking like something like 1.7 million ounces gold total.
On a gold equivalent basis, which is a difficult number to attribute to a base metal and gold mine. It's primarily gold. 40% of our value is in the gold. Now, the regulators and exchange doesn't like us talking too much about gold equivalents for all metals until you're much further along, but your numbers are correct.
So what do you have then if you separate them out? How many ounces of gold and so on are you looking at?
In the resource, we have about 665,000 ounces of gold. With gold and silver, we're allowed to talk gold and silver gold equivalents. We have about 830,000 ounces of gold equivalent, just gold and silver, and then the base metals would add to that to get to the figure you mentioned before.
Right. And what about the grades then? If you average out the grades, which I did earlier, it takes you to about 5+ grams per ton gold if you average it out. On
a gold equivalent basis.
Yeah.
The average grade is still around 2 grams per ton gold over the life of the mine. But it has been designed to go after the higher grade areas first in order to pay back capital more quickly. And I think in the first couple of years our grades are probably closer to 3.5 to 4 grams gold only, or gold alone, plus the base metals on top of that.
Your preliminary economic assessment was completed by Snowden. What were the suggestions that they made to you at the end of the report, and what was their response to the project?
Well, the Snowden mining consultants, the Vancouver office who did the report, they liked the project, obviously. They came out with a good economic assessment. Recommendations for future work are to do slope stability in the Cinco de Mayo area, which I was explaining before, to do all the environmental work, to have another look at the geology and the configuration of the model we have outlined so far, and maybe do some more work on the model, see whether we can improve the model geologically speaking, which would allow them to have better control, grade control, etc., and less dilution when they're putting their numbers together. You know, they want us to move it quickly into a pre-feasibility stage where you do all your environmental work, your permitting, more detailed cost estimates of what it's going to take to build a mine.
How long is it going to take you to get toward a position where you'd be seeing cash flow?
To build a mine on here, I would estimate 2 to 3 years if everything comes together nicely and we have access to the capital to do the work necessary to get there.
So what are you going to do to get there?
We're going to market the company. We really haven't marketed over the past couple of years, so we now have the preliminary economics out, which will allow us to market it much more effectively. The next steps are really to raise the money that will carry us through the feasibility into production. And we are confident we can get there. We do have a large Chinese shareholder interest in the company. Approximately 43% of our company is owned by 6 individual private investors out of mainland China. So they give us good contact into the Chinese marketplace as well as the mining space in China. And we already have numerous companies following us, waiting for this preliminary economic assessment. So we're expecting some good things to come out of China.
There's another aspect of the size of the project that I wanted to bring up, and that's that now you've accomplished this goal of proving a resource, proving that it's economic. You have a choice to make, I guess. Do you continue exploring, or do you move into development?
Well, it's a very good question. I would say that it would be best for us to, first off, raise money. We need to raise money and get some money in here to be able to do both. I think if we can move forward on the feasibility stage of this, pre-feas into feasibility, at the same time as exploring new structures, that we can increase the resource dramatically as well as push it towards a mine decision.
So your plan is to do exploration and move this toward the development phase. How are you going to do that in terms of cash flow?
Well, we have to raise money, so what we would be doing is raising a certain amount of money at current or slightly above prices, depending on how our marketing goes over the next several weeks. And then as we continue to develop both this project, maybe do some exploration and work on the items that need to be done for the feasibility, we will do more marketing, and we should be able to get our stock price reflecting the true value of the project and allow us to access more capital. And
being the founder of the company, you've taken this from its infancy really to a turning point in the company's life.
Yeah, it's a very big milestone for me to be able to deliver this preliminary economic assessment to our shareholders. It's a good feeling, but I know there's a lot more hard work to be done, but I'm very confident we can get there.
Well, thanks for coming in and sharing that with us today. We really appreciate having you.
I really appreciate the opportunity. Thank you.
Okay, best of luck.
Thanks, man.